JJ the CPA here, hope you're doing well. So do mask mandates cause a set of circumstances that your business would qualify for the employee retention tax credit? So the employee retention tax credit, as it sits right now, is really the last stimulus available to businesses. And in a nutshell, there's two ways to qualify for the employee retention tax credit, which is up to $28,000 per employee in 2021. So we're talking about serious dollars here. Two ways to qualify. One is if your gross receipts are down, and in 2021, if they're down by at least 20% in any quarter of 2021 compared to the same quarter in 2019, you heard it correctly. You're comparing 2021 to 2019. But the second way to qualify for the employee retention tax credit is if your business has been affected by a governmental order related to COVID. Now, let's be clear. You don't have to have your gross receipts down and have a governmental order affecting commerce. It's an either or. So I'm going to pause for 2 seconds to let you know in the body of this video, I've got links to the recent IRS notices as well as revenue procedures related to these subjects. But I also am putting on a seminar that you can get access to, and the link in the body of this will run it through. It's a 3-hour seminar. It includes Excel spreadsheets, the PDF, PowerPoint, examples, flowchart. There'll be some sub videos. All right, I appreciate if you would consider that. But when we're talking about, back to the employee retention tax credit, qualifying due to a governmental order, what I want you to know is that no, the mask mandate doesn't rise to a level to affect your commerce. Why? Well, it just doesn't, because if somebody wears a mask, they can come in. Now, I understand there might be some customers or patients or clients that say, well, then I'm not coming to you if I have to wear a mask. Well, that's not enough to affect your commerce. Now, what does affect your commerce, what does affect your business, is when there's a governmental mandate that then requires your business to only let customers, patients, or clients in the door that can show proof of vaccination or a negative test. Now, let me be clear on this. A business who decides on their own to require that does not qualify for the employee retention tax credit. So believe it or not, there are some cities and municipalities around the nation that are requiring all businesses to have a proof of vaccination or a negative COVID test within a certain recent period of time. Now, for some, it's not all businesses, but it might be that it's restaurants or bars or anything that the government is saying required, not suggested, but required, signed into a governmental order in your area that requires your business to only let customers in that can show proof of proof of vaccination or a negative test. That is affecting your commerce. Okay, this isn't an opinion. This is what the IRS has put out. So I'm putting the IRS notices in there for you that you can go through if you so choose. Obviously, when you're going to look at the employee retention tax credit due to a governmental order, then your wages during that time period of the governmental order that's affecting your business in this way is then the time period that your wages would qualify for the employee retention tax credit. Now, in 2021, if you have 500 or less employees, check this out, all wages qualify. Of course, there's always a few exceptions, but all wages, for all intents and purposes, are going to qualify. Overtime, any kind of bonuses that are customary, part-time, full-time. If you're in a situation where you're paying for the health insurance for your employees, you get to include that in addition to the wages. Now, it's $10,000 max per that time period of wages and health insurance that would qualify for the credit. And the best part is that the credit in 2021 is 70% of those wages that qualify, and it's per employee. So when you're looking at it, if you're over 500 employees, then the only wages that would count is for the wages that you paid to employees that didn't provide services. Now, you do get to include the health insurance if the business paid for that health insurance, even if the employee was out and didn't get paid. But for most that are probably tuning into this, you're 500 or less employees. Now, back to that second way to qualify, right, that has nothing to do with a governmental order, and it's just your down receipts, down gross receipts in your business by 20% in any given quarter compared to the same quarter in 19. The wages that qualify are for the entire quarter, including the health insurance that's paid by the employer. Now, it's up to $10,000 per employee, but that's per quarter. So up to $10,000 of wages and health insurance combined per quarter per employee, it's 70%. So each quarter there's a reset button. So when you're looking at the employee retention tax credit, yes, it's not quite as easy as getting the EIDL loan or grant. It's not as easy as getting PPP when that existed. But nonetheless, this isn't that hard because it's what time period, what are the wages, what's the health insurance, what's the max per employee times 70%. You can reduce down a payroll deposit to experience that economic benefit right away. You can file a Form 7200 and get a check from the IRS. Regardless of that, you have to file this information on a Form 941. If you didn't do the first two things that I mentioned to get the money, then on 941, you can request a refund or a credit carryover. I recommend a credit carryover because the IRS is behind and there's not checks coming out quickly related to that. And if you miss all of that, you can file a Form 941X, and you can file a 941X up to 2 years. So this isn't a loss. Now, I want to tell you that there's a potential that this ends September 30 of 2021. Right now, it ends 12/31/2021. I want to make sure I said that correctly. Right now, ERTC ends December 31st, 2021, and we're here at the end of August 2021. So it goes all the way through 2021, but there's a bill that has passed the Senate that potentially ends it September 30. Now, I want to make sure you know it's not a use it or lose it in the sense that if you don't file by September 30, you lose this. Now, if you never file for it, you lose it. But I don't want to panic you. All I'm saying is that this is something to be keeping an eye on. When you're now looking at your numbers, your gross receipts in 2021, you need to compare them to 2019. If you do it later, you didn't realize it, you discover this video later, and you find out you qualify, you can file a Form 941X if it's after. Now, there's a lot of little caveats to this. It is a simple calculation. It is fairly straightforward, right? There's a lot of little caveats. And so the seminar that I'm putting together for a nominal amount, you can find a link to the body. You can find a link in the body of this video, and you can see what it is that you're going to get. You're going to get a link to a private web page that has immediately all the worksheets in Excel and flowcharts and examples. And then you'll have the seminar, over 3-hour seminar. You're going to have a PDF of the PowerPoint, over 140 pages. Now, depending on when you're listening to this, the live seminar is coming up. If you're listening to this after the live seminar, well, you get to, in essence, see the exact same thing. You'll just have a recording of the seminar. Now, for those of you that can't attend the seminar live, it doesn't matter, because when you sign up for this before the live or after the live, you're going to get a link either way to be able to go back and watch this seminar as many times as you like. I'll also be adding, after the seminar, a few additional short videos to expand on some of the more important points. But nonetheless, you'll get everything that you need in that seminar and everything that you would need, in my opinion, to also maximize an understanding how to get full PPP forgiveness and ERTC in terms of getting the maximum of each. So, hey, thanks for listening to here. I want to make sure you know that this employee retention tax credit is huge. Don't miss it. If your advisor told you you don't qualify for it, I want you to just go ask and ask. I want you to go back to them, and I just want you to say, can you just tell me why? That's all. Can you just tell me why? And if they say, well, it's because you're an essential business, say, why am I an essential business? How am I an essential business? Because that seems to be the number one hurdle that advisors are not paying attention to. And they're saying, oh, well, you weren't a governmental order, you don't qualify. That's the second one. That's a misconception, as I told you in the beginning. 2 ways to qualify for this thing. Gross receipts down, or you've had a governmental order that affects your business. Hey, thanks for tuning in. I'd love it if you'd subscribe. I'll also put a link in here to a playlist that I have of videos here on YouTube talking about the employee retention tax credit. So if you don't want to come to my seminar, I've got a lot of good information. The benefit of attending the seminar is that you're going to get it all in one place. You're going to get the Excel spreadsheets, the examples, the flow charts. Nominal cost. All right, hey, check everything out, and I appreciate you. And then don't you ever forget, you've never met a CPA quite like me. All right, have a great one.